All right, let's get right into it. I think you guys are at the forefront of the cryptocurrency and blockchain conversation. And if I could just get each of you to maybe take 30 seconds to introduce yourselves to the audience, and maybe start with you, John.
Hi, thanks for having me. John Cahill. I run Asia for Galaxy Digital. We're a global merchant bank, investment bank. All things crypto. We have a trading business, an asset management business. We run a bunch of validators across a number of chains. We also run a big data center out in West Texas, which used to be a Bitcoin mine up until a couple of months ago. That's it.
Hey everyone, my name is William Sukanto. So I founded Crypto Exchange 11 years ago in Indonesia. So it's basically now the biggest crypto exchange in Indonesia and the oldest and the best.
Hello everyone. My name is Basel Ismail, and I'm a co-founder and CEO of Blockcircle. We leverage the collective intelligence from alpha traders in the private community to build enterprise-grade alpha hunting tools. That's my main background, is financial engineering, data science. And we focus on finding undervalued projects as early as humanly possible, before the institutional on-ramping starts. So, good to be here.
Thank you.
Woo! Yeah.
John, I'd like to start with you. You've got a background in Goldman Sachs. You know what it's all about in TradFi, as we call it. And you, right now at Galaxy, you've seen how institutional money moves over the last 4 years. Can you share a little bit more about what you've been seeing at Galaxy across the range of services that you guys provide?
Yeah, sure. I mean, I think if there's one theme that's dominating, I guess, large capital flows, it's really the treasury company story. We've done a number of them ourselves. We have different facets of how we interact with these treasury companies. But the queue is still quite large. I think the Bitcoin story is well distributed. There's a number of treasury companies that are out there and have scaled. And now you're seeing, more and more coins have the same sort of thing. We have more than 50 projects in the works in some stage of execution for more of these things to come. Now, we were talking before, just in the back, I kind of liken this era a little bit to the ICO craze for normie investors. It's the first time a lot of investors have looked at, anything resembling crypto. We live and breathe crypto all day long, every day. I've been in this business now for 4 years. I think we underappreciate how underpenetrated the market is for, deep pools of capital. Crypto is very much a retail-driven industry. It started out that way, which is the opposite of every other sort of financial mechanism in history. And this is the first time where I think more institutional participation is happening at scale. And we're going to see more of it before it's all over. Things are going to continue to go up and down, but I think we're only in the kind of middle innings of this phase.
Thank you. And William, you operate Indodex, of course,
Yes.
From a CTO to CEO, right?
Yes.
A lot of the flows are retail. I saw you nodding in agreement earlier. And how does what John just described, kind of differ from how a typical retail investor operates, right? What type of coins are they buying? And of course, this is data that you see day to day.
I think institutional, they're only familiar with the things that, of course, they used to do, which is in the capital market and money market. So I think mostly what they invest is only around Bitcoin and Ethereum, and that's it. But I can see that more and more. I mean, I just went back in Jakarta 2 weeks ago. I was in the US before for 2 months. So even for only 2 weeks, I met 3 people from investment banking, and all they ask is about around RWA, around stable coins, and how we can be the first who can launch the ETF in Indonesia. So I can feel that the hype is very high in Indonesia. I believe it's also echoing all around the world as well.
And what makes a sophisticated retail player versus just a run-of-the-mill retail guy? Is that such a sophisticated retail player? So if I'm a retail investor on Indodex, who are the kind of, customers that make the most alpha on the market?
I think, yes. What I can see is a lot of people in Indodex, they're doing algo trading. So to be honest, as someone who run a crypto exchange in Indonesia, I don't really know how deep, how sophisticated they are at like hunting alpha coins. But what I know is that they really deep into algo. They really deep into algo. So it's like that's why actually for me it's very hard to run a crypto exchange because like most of them they hit so many of requests into our platform. So we need to make sure that we can satisfy everyone, retail and algo traders.
Basel, your type business is finding hidden alpha or data signals that leave the system that people don't see, right? What is, I guess, a metric or a group of metrics, even or data patterns that you generally look at or your team generally looks at when it comes to think about what's the next cycle, what's the next narrative, what's the next meta?
Yeah, I mean, for me, one big thing is we actually probe Indodex quite a bit in Toko Crypto, and we try to see every single new token that is listed, and that's a very good precursor for price appreciation because you get a capital infusion of new investors being able to access that token, they acquire it, and then that precedes volume, and that precedes liquidity entering, and so forth. But we like to do it on-chain first before William and the team get it off-chain on the centralized exchange. So we focus maniacally all of our attention and engineering efforts on-chain. And we look at pre-listings, so like Binance announces a token to be listed and we scrape it every second. So we know within a millisecond, every single time there's going to be a new listing and we immediately acquire it using our own algorithm. So just algorithmic-based trading is a very good method to be able to leverage that meta.
I actually just want to say something that pertains to the topic. There's a presumption that the smart money is the big money, and that's just not always the case. If you're quick and you're scanning, dexes and you're doing, different types of analysis, crypto's empowered individuals to punch way above their weight. Where in traditional financial markets, it's really a scale and a volume and a size game. I don't know that the smart money is the institutional money. I think the institutional money has followed a lot of smart traders. Some of them, are considered retail, but retail in the institutional world is kind of a dirty word. But it's just they're market leaders in a lot of ways, and frankly, sitting in an institutional business, we watch the sophisticated and savvy, retail traders for their activity, and really will piggyback on some of those ideas.
Yeah, I think we spoke briefly about hyperliquid, right? No VC money, community-driven, minted tons of millionaires, right? Did the institutions see this coming? From your view, John, was perp trading ever a thing? A decentralized perp DEX? Was it on the radar of Galaxy?
I mean, it was on the radar. It is on the radar. We think it continues to grow. It's a rather large position that we've got. Novo's talked about it on CNBC and stuff. But I think we think it's part of the future of how markets are gonna grow. And we couldn't be more supportive, and we weren't super early, but we were active and continue to be large holders.
William, is this kind of like ground up, market-driven approach to where money flows something that you guys see as well? Or do you think it's a sustainable strategy? I mean, letting the retail, I guess, take the lead when it comes to dictating the meta?
For me, because I'm coming from very retail industry, Indodex is basically 99% retail. So I mean, it's very interesting for me as well that you mentioned that smart money is not something that the direction we need to go for, but it's like for retail, we're always looking for how smart money will move, but vice versa. From smart money, you're always like seeing the direction of retail, because basically retail is the one who moves the market, right? So I think for me, it's like retail and institutions are like supporting each other. So it's not definitely that smart money is better or retail is better. It's just move along together.
I've got one for you, Basel. What is smart money?
Smart money to me are, so like for example, Hyperliquid, we were farming it for airdrops for almost 2 years.
So you're a millionaire.
So I try to give back as much as I can. But no, so for me, everyone I knew who I considered intelligent and highly successful in trading were farming it for airdrops and were using it themselves. But unfortunately, Hyperliquid I think faces some challenge in terms of its global jurisdiction and some of the restrictions around government approval, and it's not actually legally allowed in the United States. And the most commercially advanced developed markets in the world do not allow any perpetual futures trading on DEXs, which I think is a challenge. But Hyperliquid is very smart in how they're bridging, DEXs to centralized exchanges. So I think that's a good thing. But smart money to me is where they're invested in investment narratives that are still burgeoning, that are still not completely developed. Like for me, it's like decentralized science is one interesting investment narrative that is growing, and it's been outperforming, a benchmark of Bitcoin, ETH, Sol, and Doge for the last 30 days. And to me, that's already like a very good early indication that this could be a narrative that's going to grow further. So,
I think you touched on something quite interesting, which is regulation, right? Whether it's the retail money or the institutional money that wants to come in, smart money or whoever follows the smart money, regulation is a big part of what all of you do, right? John especially, that's purely institutional play. So how do you see, this kind of like top-down regulation first approach, right? You build something, it's great, you make a lot of money, for example, and then the regulation comes down, it goes to zero, done, you're done, right? How do you see this kind of like, is this a sustainable path for innovation? If we keep building and regulation keeps chasing us, killing us, is this sustainable?
That's an interesting question. There's a few different ways I'll answer. One is, I think regulation is good for liquidity and it's good for participation to the deepest pools of capital. That's pension funds, endowments, permanent capital. That has to go somewhere. And without very clear regulatory parameters and guideposts, you're not going to be able to tap into that liquidity, and that's an enormous part of the market. What we're seeing now in the US is going to be a leader whether we like it or not. From a regulatory standpoint, a lot of the global regulatory regimes take their cues, at least in part, from what's happening in the US. And we've gone from a quite anti-crypto, anti-innovation administration to maybe the most permissive that we're ever going to see. And I think along that lines, more of that permanent capital will come into the market. If your use case is predicated on getting around AML, KYC, getting around consumer protection, probably you're going to struggle in the medium to long term. You can make quick money, for sure, and you can deliver a service that people don't have. But I think in a regulated world, and in a permanent capital world that is, many times the size, that's probably not going to be the edge that's going to win the day. I think decentralization is amazing, but I think it will be developed with a regulated pathway for it to really achieve, full distribution and more participation. I think without that, probably, there's a finite level that it can grow to.
Are there observable, so you mentioned about building on-chain first, right? Are there kind of observable money moves whenever there are regulatory announcements or updates, or for example, a launch of a new ETF? Is there kind of like observable flows into certain areas?
Yeah, there is. So our system, we're tracking social sentiment quite closely, and unfortunately, and fortunately for us as investors and OG supporters of the space, the retail interest is near all-time low at this point. We're not getting capital infusion. We're not getting millions of new users being onboarded on a daily basis, which I think positions us in a very good early position, so that's promising long-term. But the BTC flows into spot-based ETFs. It usually precedes price going up. ETH going into ETH-based spot ETFs does not seem to precede price appreciation just yet. But we track bridge volume very, very closely. So we track which layer 1 or layer 2 blockchain is on-ramping fresh capital and then coming from which chain. So for example, right now, Abstract Chain is onboarding more and more billions of dollars. Monad chain in a testnet capacity. They're going to launch in a few months. That could potentially be something promising. Base trade is commanding a huge amount of capital on a daily basis, so we look at that very closely. And then obviously you have your traditional metrics like the total value locked, where it's how much DeFi capital is locked indefinitely, but that has been manipulated quite a bit to be able to create the false confidence and create the illusion that that project or that group of protocols are actually promising, when in reality that they can just disappear overnight, right?
I want to move on to talk about, I guess, market cycles and narratives. John, I think traditional finance is built on business cycles, right? I'd like to ask William a question. Halving, this is a narrative that seems to, keep coming back. Maybe because it happens, every kind of 4 years. Is this narrative effective anymore? Do we even have to care about halving anymore?
Specifically for housing?
Yeah.
I think it is, of course. I think we already seen it for so many times already. And I mean, for a crypto company like us, we even embed this kind of narrative in our internal prediction. I mean, to how to guess what, to predict our revenue for next month, next year. How do we report to our shareholders? So, of course, halving is one of very key indicators that we can use, especially for us.
And John, is the 4-year halving something that you guys at Galaxy look at, in terms of thinking about your portfolio strategy?
I mean, I think it's something you can't ignore, but I think it's a little bit of voodoo in terms of fundamental analysis. I think it's important to understand the motivations of miners to continue to produce blocks, and I think that's something we would think about conceptually as what's the sustainability of the security of the chain, and are the incentives aligned in the right way? Certainly that's an important part. But in terms of cycles, it's like kind of the wisdom of the crowd, and then it's the crowd watching the crowd. So certainly it's an input into how we think about and frame positioning, but I wouldn't say it's a dominating factor or fills our crystal ball.
Right. Okay, so let's get to the data. What does the data say?
Yeah, I mean, we've already had unprecedented highs. So typically you have the post-halving crash, but we didn't actually experience that because of the spot-based ETF that was approved. And then the other thing about the halving is that typically you have broad interest and broad awareness and broad press coverage around the halving, and that's typically leads to that's a net positive, right? But with each subsequent halving, the actual financial implication continues to diminish. So as the halving rewards are halved, the transaction fees also are commensurate. So in the end, it's still going to be net positive for miners. The only thing I will mention about miners is, unfortunately, they have been selling quite a bit the last 14 days, which is a little concerning. And then the other thing I'll mention that is also unfortunate, so I don't want to be the bearer of bad news, but ETH exit staking queues has also skyrocketed to 800,000 ETH, and that's not very good. And then that'll be cleared and approved in 14 days. So beware.
So
Don't
it's time
shoot the
to
messenger.
show.
That's definitely a metric.
Not
we
financial
watch
advice.
The mic. That is not financial advice.
Say it out loud, otherwise it's not real. Okay, I think I want to go into something a little bit cross question for all of you. What is one of the narratives that we have seen recently, or that you have seen recently, which is kind of something that you saw yourselves, your respective organizations, from the Insti side, from the retail side, and from the research side, something that people began to rotate into, or certain groups of people began to rotate into before, kind of the full force of retail came. Is there a specific narrative that you guys saw, whether it's stablecoins, DePIN, AI?
My answer is super boring, but it is an undeniable megatrend, which is just stablecoins, period, and payments. Like, if we have any use case that's ever going to win the day for blockchain, I think stablecoins and payments are it. It is a plumbing upgrade like the world hasn't seen. Banks aren't prepared to deal with the fallout from it. And I kind of go back to the capital markets activity that we're seeing this year, Circle's IPO. I think it's for a lot of people, it's the first time anyone heard of a stablecoin. You know, we in the ecosystem live and breathe this stuff. You know, Tether's been around forever. It's second nature, but I don't think it's fully appreciated yet. And so you can kind of watch Circle's stock price move around, and that'll be a little bit of the story of how adopted it is. We on the venture side have been investing in infrastructure and the payment side, especially in places like South America and Africa and Southeast Asia. And those are markets that are underserved. And now I think the entire world is gonna see what stablecoin technology is gonna do for people.
Echoing the same actually, stablecoins as well. I mean, so 2 months ago, I joined Stanford class for 6 weeks. So in 6 weeks, we have 2 classes only for stablecoins. Wow. So that's the hype. That's the hype, especially in the US, right? So yeah, like it or not, all around the world is following what the US does. So I think eventually, all around the world, we're adopting the same thing.
So to me, with stablecoins, I think its main attraction is that it's completely blockchain agnostic, and it just works across platforms, and it's natively integrated on-chain, off-chain, and then potentially you would have Fidelity Investments, Bank of America, Merrill Lynch, E-Trade, iTrade, etc., the largest digital brokers in the world, they will accept stablecoins. And you literally have now favorable regulations that allow the largest banks in the world to hold stablecoin assets, which is huge. But for me, the investment narrative that I am personally most excited about, and what we're most excited about, is AI, so DeFi AI. And there's different projects that we have different positions in that I'm particularly, I think, bullish on the entire narrative, because it allows people to not just issue tokens using social media like X or Farcaster, etc., but it also allows you to be able to trade intuitively using natural language. That to me is incredible. So you can literally just tag an account on Twitter and say, I want you to sell 20% of my ETH and buy 30% of X, Y, and Z token, and then go a leverage long on ABC token on this exchange. And to me, that's incredible. I mean, that is so clearly, noticeably the future. And most of those, if not all of the DFAI coins, have been launched in a completely decentralized way without any VC backing or hedge fund backing, and I think that to me is interesting.
And this is almost the algo problem that you're talking about, right?
Okay. To me, I completely agree with you. I think the theme for more adoption is abstraction. So many people, you know, we spend a lot of time in the tech, delivering better tech, more advances, more efficiency. Users don't care about that. We spend so much time about the technical spec of this or that. For stablecoins, if I can send something fast, cheap, and final, I don't care how it goes from this place to that place. It just works. And I think the abstraction story, I think natural language trading is like an incredible advancement. And it takes the teeth out of approaching crypto for my dad. Right? If it's something that you can just speak to and it works, I think that the whole abstraction story is how crypto ends up really dominating way more industries and fields.
Yeah, I mean, I can't see, anyone in my extended family understanding the difference between the public key and the private key. Everyone wants SSO, right?
And they can interact with in Bahasa, in Japanese, etc., any language. So.
Right. Okay. I guess we have a few takeaways from this one, right? So first is that regulation is important. Genius Act for stablecoins, and stablecoins is the next underrated narrative. Best business model in the world, and everyone should be looking at stablecoins. It will absolutely eat payments. And the ultimate takeaway is that smart money is not laziness. If any of you would like to add any parting thoughts to share with the audience, we'll be happy to hear it. Maybe I can guide that. Where do you see us in? It's August now. 2 years time, August. Where are we? What are we doing? The crypto space.
I mean, I think the crypto space and all financial services blends together. You have things that are that are operating in the near future on regular banking rails, but it'll be with crypto behind it. And I don't think that's fully appreciated. I think the entire world is going to move quickly. We'll see a lot more assets tokenized. And I think we're starting, the RWA story is a little overplayed. But our RWAs won't be RWAs, they'll just be assets, just like any other asset. And I think that's coming very quickly.
Yeah, I think for me, the crypto space will be more and more regulated and more localized, since all the government all around the world, they trying to regulate and to control everything.
I think for me, I'm expecting the Solana-based ETF to be approved, and then that could be a very good precursor for a macro altcoin season. But I am expecting a bit of a bloodbath for a bit, and then a huge rise in liquidity, and that could potentially give us the right macroeconomic conditions for a proper altcoin season that we've been desperately, waiting for. I'm also seeing a little bit too much of arrogance and cockiness from Bitcoin maximalists, and usually in my history of being in the sector, when I see that, that typically leads to them, really paying the price and feeling FOMO. And when they capitulate, that usually leads to a pretty good run. So, but I'm not expecting that anytime soon.
All right. Thank you, gentlemen, for the extremely insightful discussion. I hope everyone here learned something. Thank you.